Good afternoon. It's the Wall Street crossover show sponsored by Admiral Markets with Darren Sinden, their market commentator. How are you this afternoon?
Yes, very well, thank you, Zach.
Right, sort of again relatively calm. There's no blood on the streets, for at least for now. Anything which sort of on the macro view taking your fancy?
Well,
or
I think China, in the absence of any further news on Greece, China has taken the lead, really.
Yeah.
Quite a bit of data out of there this morning, and we'll come on to that in a moment. But yeah, as you say, quiet, but perhaps a bit too quiet, really. It makes one suspicious that things must be rumbling on behind the scenes. But if we move on to
well, no, because we had the debt relief concept. The debt relief is probably the last thing that. That's really is the capitulation part of the whole cycle. The IMF suggesting that Greece needs debt relief, or would. That's what they might be prepared to do.
Well, they seem to think that without that, the Greeks won't be able to go forward. And I have to agree with them. I mean, the debt to GDP ratio is going to go north of 200% potentially with a third bailout round. That's so we'll be approaching 400 billion euros. How on earth will that economy ever pay that money back? Even if they had 100 years to do it with the interest on top, I doubt it's possible. So we should have to wait and see.
Right. Okay. Well, let's see what we've got on the data this morning.
Okay. Well, as I say, China hogging the limelight early doors before the European Open, and a couple of numbers were out, but I've decided to focus on the GDP for the second quarter in 2015. This is the year-on-year change, and miraculously, it's come in at dead on 7%, exactly the level that. It's always
there. I mean, presumably next Q3, Q4 will be 7% as well. Is that right?
Well.
That would be more of a challenge, I think, than.
Well, yeah. I mean, if one was charitable, you'd say that they've moved heaven and earth to massage the numbers to 7%. The forecast around the street was between 6.8 and 6.9%. The prior read was magically 7%. I think people are starting to question the validity of Chinese data again. We saw retail sales up supposedly 10%. 10.1%, I believe, year on year. Again, that all seems a little bit too good to be true, given the near panicking moves that the Bank of China's made People's Bank of China's made in terms of monetary loosening recently. But we shall see. Anyway, 7% was the headline figure, so that's what we've got to take into account. And then moving on to things a bit closer to home, Mr. Carney, of course, you'll recall yesterday suggested that a rate rise in the UK was moving ever closer. We questioned whether the data would support that, and today we've got our answer. The answer is no. UK average earnings for May were better. Yes, they're up by 2.8%, but that was below the forecast of 3%, and exactly in line with the prior read of 2.8%. So we're not seeing growth in wages on a month-to-month basis.
Although I suppose compared to inflation, which is 0, that is quite let's say it's 3% above inflation.
Yeah, that's true. I suppose in that regard, it is above inflation, but it's not that steepening curve that they would like to see as a pretext to raise rates. Yeah. And then hand in hand with that came the unemployment figures for May, and we actually had a rise, 5.6%. UK unemployment rate versus a forecast of 5.5 and the prior read of 5.5%, and that was up for the first time in 2 years. So that's not what George Osborne or Mark Carney we want to have read today.
Which came in after the election, so that was all right.
And then in terms of European inflation numbers, we've talked about these over several days, and today we had the CPI, Consumer Price Index for June in France, the year-on-year measure, minus 0.1%, completely polar opposite to the forecast of growth of plus 0.1%, and miles away, kilometres away from the prior plus 0.2%. So obviously the ECB is predominantly focused on Athens at the moment, but they've got plenty of other problems to contend with. QE doesn't seem to be producing the goods at the moment as we sort of into a full 3 months of it.
Well, I suppose the other thing to think is what it would have been like without it.
That's probably a very diplomatic way to look at things, Jack. Thank you very much for correcting.
All right, next up we've got the European movers.
Okay, China dominates this theme or this section of the show. So SKFAB, SKFASS is the ticker there. 176 krona this morning, down 8.8%. The Swedish engineer announced a profits shortfall, saying that weak European demand will hit Q3 trading as well. I think you can probably trace most of that weak European demand back to weak demand in China. And then Burberry, BRBY, LN in London, £15.85. They're down around 2.16%. And again, Asian slowdown hits their sales both at home and abroad. And if you want to, some more clarity on that, sales in Hong Kong were hit by a double-digit decline. So I think 30 to 40% of their sales are to China in one form or another. Chinese tourists are still travelling, but perhaps they're not buying so many £1,000 Rain Max as they once were.
That's a shame, isn't it? Okay, next we're going to the M&A side of things.
Okay, well, a deal that broke late last night in the US biotech sector, Celgene, that's ticker CELG, to acquire its rival Receptos, RPCT. The deal was worth around 7.2 billion. It's all in cash, interestingly, rather than stock, which is perhaps a bit of a surprise. And the deal values each Receptos share at $232. So that's roughly a $5 premium to the pre-market price for Receptos of around $227.60. And Celgene themselves have indicated better pre-market, up around 128.93. That's up just shy of 5%. The deal is going to be good news for Celgene. It will allow it to enhance its immunology and inflammation units, and it will add an anti-colitis drug, or Xanamid, to its portfolio. Celgene's been reliant on a anti-blood cancer drug for quite a while, so it's looking to broaden its base as that comes to a point where it's off patent. But what was very interesting to me is that while Celgene announced this bid, it also took the opportunity to raise its guidance, and quite aggressive it was as well. It moved its Q2 EPS guidance from $1.13 up to $1.23, and its sales forecast, it rose for the quarter to 2.25 billion, or raised to the quarter, I should say, to $2.2 billion. That's a rise of some 22%. For some context in terms of the performance, the sector as a whole, the biotech sector in the US is up by around 28.9%. So it's a top 10 performing sector in the US within 2015. So very interesting, and probably not the last deal we'll see in this sector before the final hurrah, if I might call it.
Bubble, yes, bubbling, things bubbling up there quite nicely. Right, on to the data points in the US.
Okay, well, we actually got a slightly fuller card today. First of all, producer price index for June, the PPI number. We look at the month-on-month figure here, inclusive of food and energy, because I do tend to break that out separately. The forecast here is for plus 0.3%, which is down from the prior read of plus 0.5%. What's interesting is you strip out the food and energy from the equation, and prices are being seen as very, very flat, with only a very modest gain indeed. So food prices in the States do seem to be the only real source of inflation. Be interesting to see how that figure pans out. And then we've got the Empire State Manufacturing Survey. This time that's for July. A forecasted figure of plus 3.5 versus a prior read of minus 1.98. You remember this is a survey of business people in the New York area, that they track a whole load of indicators and people's expectations. Just to put some context onto this number, this has been in a downtrend since September 14, when we had a read of 27.54. So we're way off the pace there, and probably for the Fed that makes slightly depressing reading every time we get a low single-digit number. And then industrial production for June, again the month-on-month figure. Again, it doesn't really make great reading. The forecast we're looking for is plus 0.2%. That will be better than the prior minus 0.2%. The other figure within this number is capacity utilisation, how much of US manufacturing capacity is being used. The forecast here is for a read of 78.2%. That's broadly in line with the prior read of 78.1%. But again, this number has been falling, and in this instance it's been falling from 79.5, which was posted in November 2014. It's struggling.
They're all very slack indeed.
Yes, and that's probably the worry for the Fed, that there isn't any sign of excess demand within the US economy at the moment, at least looking at these two measures.
Okay, right, let's go on to the final slide of the day, the movers and levels.
Okay, a couple of interesting movers here. So first of all, Mead Johnson Nutrition, MJN is the ticker there, $83.72. They were showing pre-market down 5%. And the reason is simply that they cut guidance yesterday for the full year 2015, and they see sales at least 3% lower over that period. And they've got issues in the Chinese milk market to blame for that. For those that don't know, Mead Johnson basically make baby milk and the nutritional products around that. And then moving on to a completely different sector, Allegheny Technologies Incorporated, ATI, the ticker in the US, $25.98, down around 7.7%. It's a specialist steel maker. They also cut guidance and cited weak demand from the oil and gas sector. And whereas they're expected to make a profit in Q2 2015, they now expect to post a loss of up to $18 million. So
a bit nasty there.
It is, and we're just seeing lots. Just seeing 4 examples of numbers being hit by a slowdown in particular regions and sectors, and I think there'll be more of that to come. And in terms of levels to watch today, we're pretty much at a standstill as far as European equity markets are concerned. So for the FTSE, I've gone with 67.34, plays 67.70. We've got a tightish range because we're just looking for direction. Yeah. And a similar story in the DAX, really no real clues as to this direction today. So I've gone with 11,500 for a bit of round number psychology, and 11,550 because we just because we need to break above there if we're going to make a further gain. US markets continue to press on, so we're back to 2099 on the downside for the S&P, plays 2120 to the upside, and in the Dow 17956 is our new downside level, plays 18,075. Currencies is pretty much as we were yesterday. So euro 109.64 to the downside against the dollar, plays 110.30 to the upside, again really looking for some direction. Maybe we'll get some news from Athens to move it one way or the other. Yep. Aussie dollar, US dollar, that seems quite static as well. 74.30 now to the downside, plays 74.90 the upside level. Dollar yen 123.25 for our downside level, 123.75 to the upside, again looking for directional cues. And in cable, a little bit better, again 156.06 is our downside level, plays 156.70 on the upside.
Okay, all a bit summary, a bit sort of tired at the moment, but hopefully there'll be more excitement later in the week. Darren Sinden from Admiral Markets, the market commentator there. Thanks very much for your views today, and we'll be back at 1 p.m. tomorrow.